Hey everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. I'm really super excited to be here. Thank you so much. Sorry I was out Thursday. It was a personal Tuesday. It was a personal day, but I haven't had a day off in quite a while. Wow, we're seeing a lot of volatility here. Fed Chairman Bostic just came out when the S&Ps were making new highs. He doesn't think we should be cutting rates, and that really kind of kabooshed the market here a bit. And the one thing I will tell you, that if you look at the markets today, uh, that we had nothing but even when the news came out, we had nothing but monster sell divergences on the market, meaning we had the extreme new highs. We had the new highs on the S&P yesterday. We had the new highs today. And the most important thing is what we saw was non-confirmations. So if we're looking here on the charts, on the 30-minute time frames, we saw we were making new highs here, but the MACDs did not confirm the highs, okay? Did not confirm the highs. And that is troublesome. That is really, really troublesome there. What's really important when we're looking at the markets to be able to see the non-confirmations in the market. And when you take a look at the overall markets and you see using the multiple time frames, the 15, the 30, the 60-minute time frames, you can see the correlation, right? And this is how I get my conditions off the 15, the 30, and the 60-minute time frame. It's really important to understand how, when you're trading the markets, to be able to look at the 5 conditions: a trend, a buy reversal, a sell reversal, a correlation, and then a disconnect. Today, for example, I know we're trading futures, but I got a buy reversal on Tesla. That meant the lows were in for the day. And then on the 15-minute and the 30-minute reverse to buy, and then we got pullbacks. But again, these correlations, when we get these conditions, this is exactly the format that we look at and how we look at the market as a whole. It's important to understand that when you're trading the markets, right, especially the U.S. markets, and you're trading the S&P futures, the NASDAQ futures, the Russell, the Dow futures, gold. I mean, today they were phenomenal patterns in gold off the 15 and 30-minute time frames. Caught these monster longs. One pattern alone, we caught like an $8 move in gold. This last pattern, we just caught a $5 move in gold off the 15 and 30-minute time frames. You know, a lot of people I've taught around the world, and I taught some of the best hedge fund managers, right, that you need to look at the underlying ETFs when trading the markets. So if you're looking at the S&P futures, looking at the spiders, and if you're looking at the NASDAQ futures, look at the QQQs. I also look at the inverses, which is the SDSs, the Pro Ultra Short, and the SQQQs. When you're looking at the YM, I look at the Dow future, the diamonds, and if you look at the Russell, the RTYs, you look at the IWMs. Okay, now it's important to really understand, when you're looking at the markets in such a fashion, that you want to be able to really just look at the market, and see that the continuous contract trades 24 hours in a day, okay? It's about 23 hours in a day, and the underlying ETFs trade like they trade like a stock from 9:30 to 4. So I don't look at pre-market data. I don't look at post-market data when I look at my overlay, which is built here on TradingView. But today, for example, not only did the spiders have that same identical pattern, okay, let's go back to the Qs. The Qs had the identical same pattern. Granted, the Fed chairman coming out and making a comment like that, okay, is pretty much negative for the market. However, with that being said, it was important to realize and understand that when you're looking at the market, even the non-confirmations, when they pushed all the way up to 43 down to 18 on the S&Ps, that was a pretty monster move. Now, if you really think of it, though, right, you think of the fact that when we had a CPI number today that came in hotter than expected, but jobless claims came in weaker than expected. There were 250,000 people filing jobless claims. The estimate was 233. So I don't know how they're thinking here or how they're balancing this out, but it doesn't make any sense to me if you ask me on that. Okay. What's really important, okay, what's really important is that when you're looking at the markets, okay, that that again, it's using the multiple time frames, looking at the multiple indicators. And if you look here on the 15-minute time frame on the spiders, you can see even here when we were making new highs here, not only did I draw my horizontal line, I'd short them here. The MACDs did not confirm on the 15-minute. The MACDs did not confirm on the 30-minute. And for me, that's the kiss of death right there. Wow, this gold just exploded here. Wow, gold just ripped $7, $8 again just now. Two great long patterns in gold. Look at this gold go. My goodness gracious. Wow. Unbelievable. Unbelievable. Oh my God, exploded. All right, so what we're looking for right now is we have what's called a disconnect. The S&P futures on my indicator 4 are negative. But remember, on the underlying ETFs, we're still bullish on the 15, 30, and hourly. The market has a lot of underlying tone here right now, okay? The markets have a lot of underlying tone here, underlying bids. So it's not something that I would be more, looking for to, I'd be looking for some overbought conditions, and then I'd be looking for some patterns to look for pullbacks here. Again, right now, we're still bullish. And just to give you an example, 572.29, that means the S&Ps have to break 57.90 just to get a sell reversal on the 60-minute time frame. So I don't know if that's going to happen here or not. What we really want to do and what we want to focus on a lot is trading the markets to look at the underlying ETFs. If you're trading the continuous contracts, so many people went from paper trading to trading micros. And you know what? It's really super important that when you're looking at the markets to be able to learn how to scale in and scale out of a position. So for example, on the S&Ps earlier, when they were pushing down to the lows around like the 110, 115, I said I'd be looking to buy between certain points here. And then guess what? We waited for the pullback, and then the market stripped. That was off the 15-minute time frame, getting deeply oversold here, okay, within the algorithm. And I kind of knew that pattern to the point that we were really going to expect a nice drop. Okay, a nice pop there. I apologize. Okay, when you want to trade the markets, it's important to realize and understand that when you're trading the markets in this fashion, again, trading micros, okay, learning how to scale in and scale out of a position. So if you're long and you're buying at 22s, 20 and a halves, maybe some 19 and a halves or whatever. I don't like to do 1, 1, 1. Okay, I like to do 1, 2, and then 4, because that's how you get the most bang for your money there, as they say, right? Because now what you're doing is, so basically, what you want to do here, okay, what you want to do is you want to be able to, again, use the underlying ETFs, okay? And so that gives me a lot of confidence, right? So the S&P futures, I mean, I can't tell you how many people each and every day, they just say to me, Steve, the S&P futures, no, you got to look at the underlying ETFs, right? I correct people all the time, especially during my live stream, how important it is to use the underlying ETFs in trading the markets, okay? And when you're trading the markets in a way that you want to be able to get the real, you want to be able to try to get 4 to 8 handles a day. If you're trading NASDAQ futures, anywhere from 10 to 30 handles a day. Sometimes we're doing anywhere between 25 and 50 handles a day, depending on the volatility here in our room. Look at gold. I waited patiently. Today, I got the buy reversal on the GLDs on the 15. I got the buy reversal on the 30-minute. I got the first pullback on the 15 on the deep oversold condition. I got that. Boom, that ran 8. Then I waited for the next pullback on the 15 and the 30-minute time frame. And then, bam, what happened? We got the pullback and we got the bounce. 2 $8 moves in gold. Great patterns. These patterns repeat themselves. They're phenomenal. And I got to tell you that it really, really was worth something to be able to get these 2 great longs. Everybody in my room and my community said, oh, well, we're going to wait for the pullbacks in gold. Bingo. Exactly what we did. That's exactly what we did. We waited patiently for the 2 great patterns. Had the GLDs not, if I didn't look at the GLDs, I would never have been able to pick up that pattern. Beautiful positive MACDs on the 30, beautiful positive MACDs on the 15. And when they pulled in, they were beautiful. It was like a Picasso. All right. It was an absolute Picasso. And I teach this every single day to people. I teach people the ability to understand the markets, to really to understand the importance of trading and seeing the non-confirmations and seeing the continuous contracts and using the underlying ETFs. There are patterns here. I saw just now on the S&Ps, just now that just shot about 4 handles, and that I picked up off the spiders and off the SDSs. So I teach this every single day, and I teach this in a way that gives you the ability to really enhance your trading every single day, to be singles, right? To hit singles and not home runs, to be able to really see the market and be in a situation that gives you the ability, okay, to trade the market in a way to be able to just get in a situation that you're continuous every single day. You know, it's so important that I teach people to take money out of the market each and every day. Hit your goals, stop, and then paper trade. And whether you're trading stocks or futures or foreign currencies, and to me, I think the most important thing is that when you're trading the markets, you know, you want to hit your goal. My goal when I first started was to make $100 a day. Well, I made that $100 a day in the first hour, half hour, third hour of the day. I stopped. I hit my goal. And then I went to the next day. I went to the week later, I went to make 200 because my friend said his goal was to make $100 a day for 1 month. I'm like, hell no, I'm not doing that. I'm making $100 a week, then I'll bump it to 200, then 300, then 400, and etc. That's how I did it. Okay? That's how I did it. The thing is, what people have to realize when we're trading the markets, right, that you want to be able, there's nothing worse than a guy I know made $9,000 one day, and at the end of the day, he gave it back by $1,000. That's a $10,000 reversal. Are you crazy? Okay, that's insane. Okay, so what I like to do and what I like to say in this is that's a no-no. And boy, oh boy, did he learn the hard way. And he swore to me he would never do that again. And thank God he hasn't. Okay, but you know, I've been doing this now. I have 41 years. I'm in the game. I'm going on to my 42nd year, August 1st of 2025, 42 years. I've got to know the greatest traders in the industry, best hedge fund managers. I have an unbelievable respect for all of them. And, you know, for me, I think it's just really super important that when you're trading the market, you want to be consistent. You want to be able to have everything at your fingertips, to be able to trade the markets, be completely aware of your abilities. You need technology. You want to be able to have everything in front of you that you can be able to make a better life for yourself, and that is important, right? To be able to every single day just go for singles and to take money out of the market, right? Learning how to use my indicators 1, 2, 3, 4, using the having, yes, indicators lag, and that is true, right? But here's the one thing I will tell you: when indicators lag, because price leads, indicators lag, but the indicators set up the patterns, okay? The indicators set up the pattern, and that's important, okay? When you can be able to identify the patterns, identify the whole moves in the market, to the point that when you're trading the markets, you want to be able to just see the pattern on the continuous contract, check it with the underlying ETF. Sometimes there's a disconnect, and then when they correlate, you better be going in that right direction. It's very, very powerful, okay? Very powerful. Does anybody have any questions at all? And again, the Mental Mastery Project. Can you explain why sell reversals pattern failed? Can you explain why the sell reversal pattern failed on gold? I didn't get a sell reversal pattern. I had nothing but buys on the gold today. I don't know. I had two great longs on gold. Here's the 15-minute time frame right here, and I'll switch this over to the 30-minute here. I did not have here's the buy reversal on the 30. So the 30-minute correlated with the 15. This was the first pullback on the 15 right here, and this pattern right here was the second pullback on the 15 that correlated with the 30-minute time frame. I don't understand how. Can you explain the video was failed on GC? You mean the drop from 45 down to like 35? Is that what you're asking me? Well, basically, we had a significant overbought reading on the 30 and 60-minute time frame while S&Ps are getting hit. We had a really beautiful pattern on that, and we had a really beautiful pattern on the on the 30-minute and 60-minute time frame getting deeply overbought. So that pattern right there, you were able to on that pattern you were able to identify the significant overbought readings. We were 97, 98 on the gold off the GLDs, and I saw the bigger time frame that the MACDs did not confirm, but I didn't short it. I waited for the pullback because it could have kept on going higher and higher and higher, and then I didn't want to be able to be caught short on that. Okay, you got to look at the GLDs. Okay, whoever you are, if you need some help, you can text me and call me at 914-500-7484. But this is the same mistake so many people make in my live stream. They say, "Oh, Steve, the S&Ps. Do you look at the underlying ETF? Did you look at the spiders on the 15, 30, and hourly? I don't know what you're looking at, but I see something completely different," right? So again, I just want you to be clear with this, and I want you to understand that it's really super important. Okay, and yes, follow me on Twitter. Okay, at Steve Kalayjian. Okay, S&Ps. I just saw the short just now. Just dropped 7 handles, 8 handles, 10 handles. Oh my goodness gracious, what a short! Wow, unbelievable. 70 cents on the. Okay, look at them. What a drop. Now the 15-minute time frames reversed to sell on the S&P. So you had a disconnect. The MACDs are rolling over. The negative, and look at the 30-minute time frame here. Look at the 30-minute time frame here. On the this is the S&P. See, the 15 reversed to sell. This was the short right here. Okay, above they got. Look at them drop. Wow, good Lord, what a short! What a short! Meta, Apple, Microsoft, everything. Nvidia dropped. Beautiful shorts, unbelievable. Beautiful, beautiful shorts there. And you know, the one thing I will tell you, okay, when you're trading the markets, okay, you really see the power of the correlations, right? You see the power of using the underlying ETFs. It's so important that you have this at your fingertips to be able to have your chart set up the right way. I still say to everybody the most powerful time frame is a 3-minute time frame. Okay, but with that being said, it's important to understand that when you're trading the markets, okay, that when you see these great patterns and they align, look at the S&Ps that just dropped 10, okay? Should have called that short during the live stream here, during the Back to the Futures. But again, how was I able to see that? Okay, I was able to see that because why? I got the sell signal on the spiders on the S&P on the 15. It was a lot different look than the spiders here on the 15, right? It's just that's the 1 hour. Let me go back to the let me just change this actually. Here's a 15, and I'll switch it here, and here's the 5-minute. Okay, so you can see this pattern here. Oh my God, they're getting killed. Look at them drop. Wow. Look at the S&Ps. Oh my Lord. They just dropped 15 handles just now. What a beautiful short pattern. Oh my God. Oh my goodness gracious. They just dropped the dollar. Oh wow. Wow. Unbelievable. Oh, and they're still going down. They're still getting, look at Meta get killed. Everything is getting killed. Everything is getting kabooshed. Everything. That's a beautiful pattern. Okay. On this, that's the 1 hour. Let me switch this over to the 15. Let me show you. You see the negative MACD here on the 15-minute time frame. Again, you made new highs here in the non-confirmation, but this is the short right here. Beautiful. S&P's got a high as I think 33 and a half, almost 34 there. Okay, and what a great drop there. What a monster drop on the S&Ps. Does anybody have any questions? We have 8 minutes to go. I'll see you here Tuesday and next Thursday again. And thank you for allowing me to have that day off on Tuesday. If anybody has any questions, it's really important to learn from me. I've been doing this now, like I said, 41 years. I've taught some of the top hedge fund managers in the country. It's really important, and you really need to understand how important it is when you're trading the markets to be on the right side of the market, to have a great mentor like myself, because I care. I talk to people after the close. I want you all to be successful. It's my legacy depends on your success, and to be able to identify these patterns each and every day. Can you explain the short on the NASDAQ? It's identical, okay? So the pattern on the short on the NASDAQ, if you look here on the QQQs here, let's see here the Qs. Let me just go here on the 15-minute, and then I'll switch it to the 5. It's the identical same pattern. Oh, this is, I got to switch this over here. This is, I switch this. Okay, if you look here on the Qs, you can see here that the Qs made a new high, but on this pattern right here, the 5 went negative. But if you look at the 30-minute time frames, you can see that the 30-minute time frames were rolling over here. Oh my God. Right here, you can see the 30-minute is rolling over. So when we got that push up off the 5-minute time frame, it really, really was very clear it was very clear and how powerful the drop was. Okay, on that. But again, it's all relative to trading the markets in a way that will give you. So looking at the NASDAQ futures and the Qs, I look at the bigger time frames, the 30 and 60-minute time frames. The 60s and 30s on indicator 3 are starting to roll over, and I said, that's it. They're going to get kabooshed here. Okay, they're going to get kabooshed. Great question. Okay, I love the more. Listen, no question's ever stupid, right? But the more you ask, the better we're going to be, and that's the importance of it all. S&Ps just rallied 5 just now off that low, but we dropped from 13 down to down to like 16. So 33 down to 16. They dropped 17 points like that. You know, very, very very important. Okay. Great pattern. This is what we do here. We normally get anywhere from 8 to 12 great patterns a day on the S&P. And that, that says a lot. Patterns like that, 5 to 8, 8 to 10, 12, or even greater. So again, this is what we do in my live stream each and every day, from 9 to 4. And then again, I take a half hour every Tuesday and Thursday from 1:30 to 2 to be with all of you. I like the questions. I hope you all could really resonate and understand how I spent 10 years of my life building this charting app and giving me the ability to identify these patterns which repeat themselves each and every day. It's important that you learn from someone like me, because it's important to fully understand the importance of trading the markets in a way that will give you the consistency factor each and every day. Okay. Does anybody else have any other questions? And then please feel free. Is this a valid long setting up on gold futures? No, we already had the gold long futures. This pattern right here is called a triple Lindy. You may get one more push up on this, but let's see. I wouldn't. You got to disconnect here now. 15. You may get it if let's see. If gold gets down probably to the 37.5, 39.5 range, I probably will look to buy it off the 5-minute time frame. Okay, S&P's right back up just now on that. You see how fast the markets move, and you can see the ability to be how fast you have to be here. Okay, just ran here. Wow, unbelievable how fast they ran. It's the one thing that people realize in trading micros, and people are trading micros in big size. Sometimes they'll do 8 to 20 different contracts, and that's fine. But remember, there are a lot of fees involved in that, but that's fine if people are comfortable with that. Is this valid long sitting up on gold? And we just did that. I probably, like I said, look to buy the gold on the pullback on the 5-minute time frame. S&P's just rallied. They dropped 15 and they just rallied. They've dropped 15 and then they rallied. Looks like they rallied 10. Unbelievable. Unbelievable here. Unbelievable. See how fast everything moves here? Everything moves. Wow. Oh my goodness. Oh my goodness. Oh my goodness. All right. Everybody have a great, great, great day. Be consistent. Anybody have any questions, please text me or call me at 914-500-7484. God bless you all. Have a great day and have a great weekend. And I'll see you next Tuesday. Back to the...
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.